What is going on? Billy here, Storm Trades, with another trade recap. This time we're going to go through a gold futures short trade that I took on Tuesday, July 8th, right after the cash open at 9 a.m. This trade is a good example of not having a clear daily bias, but using the most recent data on the hourly time frame to understand narrative and to get on sides with a very nice expansion move lower. So let's get right after it. All right, starting on the daily chart, which you're looking at right here. Always start off the exact same way. I'm looking for a daily chart that is screaming at me, okay? And it's going to be screaming, it's going this way, okay? And I'll understand why. If it's not saying that, right? If it's giving mixed signals, and I don't spend any more time on it, right? It's just a neutral bias. Doesn't mean I don't trade that day. Most of my analysis is going to be done on the hourly time frame. This is an example of a day where, and you'll see, right, when the daily bias is not that clear. Right. So anyway, that being said, let's start off. I always mark off the previous daily low, previous daily high. Okay, we can already see that we've swept the previous daily high. Does that mean anything in and of itself? Not really, right? Because we also want to take a look at where price has recently been delivering from, right? Have we been inside of any sort of internal, or have we swept some external range liquidity in the form of swing highs, swing lows, or fair value gaps? I do want to make note that we have, in fact, recently swept a swing high. And after that, we had a nice expansion move lower, right? So if you just looked at this price action, right, and nothing else, this to me tells me that price is going lower, right? We had a nice move off the swing high, right? Expansion down, slight retracement into most likely 50% of this candle, sweep the previous daily high here, and we would expect to go lower. However, we are currently delivering out of a internal range liquidity. So we're sort of sandwiched here. So once we hit the swing high, swept it, we move down into our target, which would be the internal, right? Price moves from external to internal and vice versa. So already I'm telling you, I'm looking at this, and if you're looking at this, right, this is going to be difficult to try and determine where price is going, right? We are delivering currently right out of a internal range liquidity, and we have most recently come from some external. So we have hit targets. Okay, so just want to make note of that. I also have a previous weekly high up here. That's a big liquidity pool. And but anyway, I want to spend too much more time on this. Okay, this is a day where I was neutral, and being neutral is no big deal. Okay, I don't want you to think that you have to. Oh my God, I have to have a bias. People trade without a bias altogether, right? And they're really successful. Everyone's got to come up with their own thing. This is my thing, and when my thing is not clear, I'm neutral. Now, when I'm neutral, I just pay a little bit more attention to and put a lot more weight on the hourly time frame, and I'm going to want to see bearish PD rates hold, and if we're bearish and change the state of deliveries hold, and I want to see price moving in a clear direction, right? Which is what we actually see when we turn to the hourly time frame. So let me pull up the hourly chart here. And as you can see here, this is the 8 a.m. okay, hourly candle here. And we can see where price has been coming, right? So price was moving lower, and we had a change in the state of delivery on Monday. We moved higher, and we were moving higher, right? Look at all these hourly bullish candles. And then we had a displacement lower right here around 7 p.m., right, during the Asia session last night. Now, that may not look like a big change in the state of delivery there, but it is a change in the state of delivery regardless, okay? And we certify that this basically certify. We're confident that this is a change in the state of delivery whenever we see displacement and we leave ourselves a fair value gap. And then, okay, even then, we're not 100% sure, but when we start to respect those levels, now we can start to get an idea that, okay, maybe this is a change in state of delivery. We're starting to respect the bearish hourly fair value gap here, and we're starting to disrespect the bullish hourly fair value gaps, okay? So if you can see right here, we actually already closed below this nice This was an unmitigated bullish fair value gap. We've already closed below that, right? So it's just helping us understand the narrative. Now, we also put in here an order block on the hourly chart, right? So this is the series of up close candles that came up and respected the bearish fair value gap and the change in the state of delivery order block. I just want to take note here that we also are inside. So we always want to take a look at where is price currently, right? So we're currently inside of a bearish POI. This is my green light to go to the M5 time frame and start looking for trades in this particular case to get on sides with a bearish setup, right? So I'd be looking for us to use this interim range liquidity to displace lower and perhaps take out this previous daily low, right? But I also remember I always want to take a look at where the 1/3 ADR is, right? Just to sort of see how much room we have to play with, right? I typically will target the 1/3 ADR, and we've got a little bit of room here, right? So we're sort of right there, right stab in the middle. We've engaged the hourly bearish fair value gap. I'm now looking for a way to get on sides with lower prices. So I'm going to move down to the M5 time frame. Okay, and as you can see here, right, we're engaging with this bearish hourly fair value gap. And I'm looking for, on the M5, I'm looking for a sweep of liquidity and then some sort of a displacement down, creating a change in the state of delivery on the M5 time frame. Now, we already have a sweep right here, okay? Here's our sweep. And I would want to see a close below this series of up close candles that took that liquidity, right? We don't have that yet, so I'm just watching price. Now, let's move this forward. On the very next two candles here, we get a displacement down below, right? So this is sort of a hat tip that price may want to move lower. It may want to move lower really quickly. That said, I want to mark out we have a this is technically a unicorn. Okay, so we have a breaker block being the series of down close candles prior to the move up that took liquidity, and we have a displacement down through it that leaves a fair value gap that overlays with the breaker. All right. Now, at this point, I have everything I need to get involved with a trade. Now, I don't want to get involved with a market order down here. I want price to move back up and to tag me in on a limit order. And I would put that right there. Okay, so everything I need to get involved with this trade is ready and set. And I have the 1/3 ADR down here. That's below the 2R. So I like the 2R as a target. Now, I'm going to move price forward here. Technically, we actually got tagged in right here, but it's impossible for me to use the bar replay trading system and show that. So price did actually then come back up and test the breaker one more time. And when it did here, I'm going to put in a sell. My stop loss originally, right, is up here at the swing high, and my take profit down here at 2R. Now I don't just set it and forget it. I'm looking for ways. I'm watching, right? I'm watching price, and I'm looking for ways to get involved and reduce risk at the same time. So if I can reduce risk or get roughly the same amount of risk and add a contract, okay, by pyramiding in on a order block or another test of the breaker, then I'll look to do that, right? So let's watch price here. And I will take note, right, that we had a move, okay, this series of up close candles into this M5 fair value gap, right? This to me demonstrates this is a qualified order block. Okay, so we've got a series of up close into some internal range liquidity. We have now displaced down below, right? This is almost the same model as we had up here. Okay, it's the same concept. And at this point, I'm going to reduce my risk down to this swing high, okay, and add a contract right here. So now my total risk is 640, right? That's about $200 more than I originally had on there. But that's acceptable, right? Because our potential new profit is 1620. So we're looking at a 2.5R trade, and we are moving in the right direction. Okay, and the narrative is playing out, and we actually got a displacement quickly lower. Look how it just tags the 1/3 ADR. Okay, I absolutely love the 1/3 ADR as a place to watch for reversals and to target. And this was actually a crazy trend day, right? So watch price go all the way down here, and this is the previous daily low. We go all the way down and tag that. Okay, I think the total move on the day was like close to 7R, probably went a little bit further. Yeah, crazy, crazy. 8R. Okay. Anyway, if you guys got anything out of this, I really appreciate a like and comment in the comment section. Subscribe if you haven't. I really appreciate it. Hope you guys get something out of this, and you have a great day. Bye bye.